Okay, we had the market gap higher, but then it ended lower. The S&P stalling at a key Fibonacci retracement level, still forming that head and shoulders. I'll show you all of that in just a moment. The Dow was down 0.5%, just over 0.5%, down 224 points. The S&P 500 was down 5. It was higher and reversed. We get another gap and trap on the intraday charts. I'll show you that, but we ended it down 5 points, down 0.08%. The NASDAQ was higher by 0.35, being helped by Apple and NVIDIA. Apple slamming into the 200-period moving average. It's not at new highs, but having a rally. The new investment being announced with Apple, and then again being able to avoid a lot of those tariffs with trying to manufacture devices in the United States. Again, things being manufactured in the U.S. avoid the tariffs. In this rally out of Apple slamming into the 200. Russell was down 0.30%. The VIX was down 1.19%. The VIX is in backtest mode from the breakout of the bullish falling wedge. Getting a rally, a gap higher, but we're seeing the same type of pattern that we've seen back up at the top. There's a gap and traps. We get these gaps higher and then we turn in the other direction. Gap higher, turn in the other direction. And this is as the distribution is taking place. Retail investors are buying and the institutions are selling. We gapped higher after reversal bar on Friday. This is the 15-minute chart, but this gave us a reversal bar, our bearish belt hold in the daily time frame, and then we gapped lower, confirming that candlestick. We have not yet gotten a follow through. We're now forming a bearish rising wedge, a bear flag pattern, the intraday charts, and we had another one. We gapped higher, and again, notice gapping higher, turning down, gapping higher, turning down, gapping higher, turning down. Here we gapped higher right into the 78.6 Fibonacci of this decline, overthrew it ever so slightly and turned down. We have turned down, turning back up. It is very possible we've completed an A and a B move, ABC move, or maybe a larger pattern or complex correction. I'll show you on the other 15-minute chart in just a second. Gapping higher, we sold off through most of the session and then rebounded towards the very end of the session. These are 15-minute bars. Coming off the 78.6 Fibonacci and the S&P. We've filled the gap on a closing basis. Now, here on the 15-minute chart, I told you yesterday, speculating on an Elliott wave count. Elliott wave is speculation. Counts can be validated or invalidated. I'm just working with this one, and I think we have a 5-leg push down here for A, and then I'm marking this ABC correction here in red and made a slight change to it. Had this originally marked as an AB as I have it here. Had the B over here. I think it's a better fit because this does look like a 5-leg push higher. 1, 2, 3, 4. Or gap higher for 5. And I told you yesterday this count may or may not be done yet. Again, I'm looking at this as a potential rising wedge. Looks more like a bear flag. I'm sorry. It looks more like a rising wedge on the daily chart. You can clearly see these highs right here parallel to these lows over here. And now we're breaking down, probably back testing here. Let me just adjust my count. If we did, in fact, peak at the 78.6 Fibonacci and we now have a lower high completed and the bear flag is now breaking out, which is a continuation pattern of the decline, then we could be getting our next 5-leg push down if we have a 5, 3, 5 pattern. So again, how we had 1, 2, 3, 4, 5 over here to complete this A. So now if we're breaking down from the rising wedge, we now have potentially 1 rallying back up to get 2 if we end up seeing this play out. If this high can hold, then you've got a wave A, a wave B, and then now potentially a 5-leg push down for wave C. Now maybe if we get a shallow sell-off, not much of a decline, like I keep saying, you go towards the 50 period or just beyond the 50 period there, maybe we just get a simple ABC move, or this whole thing could be an A or a W for a complex corrective move. And I've marked that here that, again, we could see going into next week, we could see another 5-leg push down. And then, again, would that complete the correction? Maybe the 50 period or just beyond the 50 period undercutting this low? Or is this the first, wave of a larger correction that could take us closer to the 200 period moving average, or at least moving towards it? I've marked this as an A question mark or maybe a WXY complex corrective pattern. But I'm just telling you again, Elliott wave of speculation. I believe that we've completed with this high over here, as I've said, primary wave 3. I think we're in primary wave 4, and that's going to correct in an ABC move or a complex corrective move. And again, this could be the start of it, or again, a more shallow retracement. We've come back, we've filled the gap up here at 63.39. So again, we're getting a lower high. Now we'll see if we get a lower low, and then we'll see, does the correction quickly with just a shallow sell-off, or is it something deeper? But again, this is speculation on my part, but if we've now completed B, then we're starting this C wave, and we have waves 1 and maybe 2 under construction here. We'll see if we get a throwback or back test the trend line. We are getting the 50 crossing back above the 200 in the 5-minute chart, but again, crossovers can sometimes be associated here with the bottom or here with the top as you get this is kind of going sideways in this range. We're watching, do we now get a lower high for the S&P 500? Do we now start a 5-leg push down? I think that's very, very likely. Again, this is speculation on my part. I told you last Thursday that I believe that we had topped. The candlesticks were confirmed, but we don't have a follow through yet. And again, we'll be looking if we get it, if we're now selling off. But the bear flag now breaking down that we've talked about, and now possibly starting wave C, possibly concluding wave B. Rose by over 3%, but it's rallying back up to that 200 period. This is the daily chart. The market recently moved to a new high. Apple's not moving to a new high. We've already had the death cross of the 50 and the 200. That's a green line crossing below the 200, the black line. And we're rallying back up 3%, rallying up right into that 200 period. We may overthrow it, but again, probably coming back here to fill this gap, and we'll see if we get rejection around this 200 or overthrow it and get rejection surrounding this area. After a powerful move the last 2 days, helped the NASDAQ and the market. Please support the channel with the link directly below that allows me to be able to provide you with this information. If you like the charts, you like the indicators, please let me know that by supporting the channel. Today I'll be sharing with you my trending signals towards the end of the video. For the S&P 500, we have momentum flipping back to bullish with NASDAQ by NVIDIA and Apple. Again, we've got this longer term trend line here in black, and we've been hovering just under that level here in the weekly time frame for NVIDIA. We had that bearish doji last week, gapping higher and now testing these highs again, helping the NASDAQ today. And yesterday we had, again, the Apple. So it's been Apple and NVIDIA here. Still on for a couple of weeks into late August or mid to late August. Again, I still think you're going to get this completion of a 5-leg push higher. I think that we'll end up getting a 4 and a 5. I think that's going to do it for NVIDIA. I think it's forming a massive broadening formation. Showed you the 15-minute chart. If we do have an A-B structure, we sell off, getting rejection, again, overthrowing the 50 period, overthrowing the 10, and then get rejection around these areas, dropping back below the black line, the 200 period. If we come back and take out this low, then again, you've got a possible ABC structure, or as I've said on the 15-minute chart, this question mark, is this whole thing an A? And we get a B and then a C, or maybe a complex correction, a WXY pattern, or does it end right there? Would you get one more push down and some more shallow retracement? And that's the end of it. And we just go maybe to the 50 or just under the 50 period towards the 200, but not reaching it. And I've talked about, do we get a deep retracement or do we get a shallow retracement, a big sell-off or a small sell-off? So again, the sell-off may end right here where I have A marked, or again, it may get extended towards the end of the month. We'll see how it unfolds. When we had wave 1, we sold off. 2, rallied back up as we're doing right now, but then sold off some more. And again, I've marked that as an ABC structure, completing primary wave 2 there. So again, see if we get a death cross on the 50 and the 200. We'll see if we get something bigger or something smaller. Again, could be either way. Divergences though did play out. First diversions we got, we went in early July 3rd, we went sideways, and then we had that push higher, and it formed this multiple point divergence, and that's now playing out, giving us this larger correction. We've now retraced back up to our 78.6 Fibonacci. talked about this possible head and shoulders pattern that could be setting up, and I've taken the measurement just from the high here with the breakdown of our rising wedge and the back test down to the low there on Monday. Now risen back up, and we're coming just above the 10 period, but again, not closing positive territory with our rally above it. A down day today, so the rally was sold another gap and trap as we've been seeing, but you got this possible inverse head and shoulders. You got this possible head and shoulders. I'm thinking Bitcoin in my mind there that has a massive inverse head and shoulders. Talk about my Bitcoin videos. Maybe I'll link that at the end of this video. I want to watch that because, again, history, the last two bull markets, Bitcoin, they ended in 1,064 days. Both of them, the last two bull markets. Bitcoin's going to hit that in October. Go watch that video. It's pretty fascinating. Show you that in the Bitcoin video. Could be in keeping with the stock market, again, peaking in maybe September or October. It could drag out a little bit longer. 2021, the NASDAQ and Bitcoin, they peaked in November. The S&P peaked right after them. So we'll be watching, move into the latter part of the year here, but we're going to correct and then go make new highs. Then I think we're going to top. But you've got this possible head and shoulders. Here, right here, I've marked it. And again, if we come back down to the 50 period, this would take us to the neckline just above it. And this would take us beyond that 50 period back towards this gap fill over here and towards our cloud. The 200 period is directly below that. So again, do we get an ABC move or, again, a larger corrective pattern as I've marked on the 60-minute chart? Either one is possible. This 5-leg push can be bigger than the 5-leg push that I've marked on the 15-minute chart. This one can be deeper, and we could come down here, to the 50 or beyond the 50, moving towards our 200. I think we're correcting, and I think we're going to go make a new high. Again, we saw the extreme on the RSI at 76 and 77. I think a larger divergence is going to develop. As I talked about over here, we had it on the RSI, we had it on the MACD, this larger divergence, although I think we'll go much higher than this level here. I think we'll go to 66 or 6,700. Here we stalled at the mid 6,400 area. Larger divergence is under construction. I think once we finish the pullback, I think we will resume the advance. Bears are telling us it's over and over. These are the people that were telling us down here when I called the bottom that we were about to crash. And this whole rally that I predicted was not going to happen. And I called the bottom and I told you we were going to rally to new highs. I was right. Called a top here on Tuesday. I told you we were going to move to new highs. We went sideways. I told you we were going to move to new highs. I'd be looking for a top. Did call one that previous Tuesday off of the upper band, very similar to the reversal off these upper bands, but there was no confirmation. It went 18 points higher, and I called on top for the second time. Looks like that's going to be correct. There is resistance right here, as I've talked about in the weekly and the daily time frame, but I think we're pulling back, and then I think we'll clear that resistance and go to the resistance in the weekly time frame with the channel that I've been talking about in the videos. I think the MACD is going to probably come down here towards the center line and maybe dip below it and firm up, or firm up around the center line. I think you'll end up seeing a larger divergence building upon this, or maybe a brand new one begin to develop. But again, very similar. The divergences that developed over here on the MACD and on the RSI, I think that is a very similar thing that we're going to see happen here. The RSI and maybe the MACD build upon this divergence. Remember, we stalled at resistance in the weekly time frame, this trend line with our log scaling. We slammed into it. We got the bearish engulfing last week. We'll be watching. Does that get confirmed before the week ends here? We got another trading session. We'll see if this candle is confirmed this week or next week. I told you there's a very good chance we're going to get a correction off of it. Actually, I think we'll move to the upper channel line here near 66 or 6,700. I think we're pulling back and eventually we'll clear this trend line. And then I think we'll see a top. And again, that could come September, October, drag out a little bit, however long it takes to reach this trend line. But looking at the length of the bull market history for Bitcoin, could see it come to a conclusion in September or October. It's been the length of the other bull markets for Bitcoin. And again, Bitcoin has a positive correlation with the market. So if it tops, again, I believe Bitcoin's going much higher before it does top. I think it's in the blow-off top, and I think the S&P is in the blow-off top, as I told you back at the April low. I think this is the blow-off top, and I think we're in that final phase of the blow-off top here. This pullback, I think we'll get the final climax move. Turning off the linear trend line right here, Again, just slightly overthrowing it. I think we'll pull down and then move maybe closer to this level. Again, 66, 6,700, turning down off these trend lines, but then trying to get to the upper channel. This is the channel from the 2020 low. The other one is the channel from the 2022 low. They come in very close to one another. Looking at the 66, 6,700 area, we reach this trend line, but not the other one. Maybe we hit both of them very close to one another. Now, using our linear scaling, I talked about the resistance here from, let me just zoom out here, from the 2023 low connected to our low here in April of 2025. You draw a parallel boundary to this peak right here, and it's pointing right up to where we're at. So again, you had resistance here in the daily time frame. You had resistance in the weekly time frame. We're turning off at those levels of resistance. Parallel channel from the 2023 low. So just some interesting trend lines in the weekly and the daily time frame. Again, we went sideways to the July 3rd high. We went sideways. We broke out. We went a little bit higher. Broke down on that Tuesday, where I called the top for the first time. I told you I thought that was a top, but I told you I could be wrong if we don't get confirmation. We didn't get confirmation. We back tested. I talked about a possibility of back test. We're jumping above the trend line and still trying to go to the upper boundary of the rising wedge. We ended up back testing, and we went 18 points higher. We slammed right into that trend line that was parallel to that low here. April connected to the 2023 low, right into that trend line, right into the trend line with the log scaling as well. This is linear. Gapped lower on Monday, rebounding back up now, slamming into the 78.6 Fibonacci and turning down off of it. So what I'm watching is the Fibonacci retracements. Now, if we go to the 50-period moving average, that's a support level. If we come just below the 50 period, you have the 0.236 Fibonacci retracement level. The 200 period here, the 0.382 is down here. I don't know that we get a deep retracement, as I've said. Just get a shallow retracement, not even reach the 200 period. Maybe something like what we had over here with wave 2. Just move to the 50 period or just beyond it towards the 200, but not reaching it. And I keep saying that. I want to make sure people hear what I'm saying. We may not reach the 200 period. We may find support surrounding the 50 or just under the 50, but our 2.36 is right there. This horizontal support level. You have a gap under that right here that we may try to fill right there. And again, remember, that's where the head and shoulders pattern measures to, right around that area. And that is in harmony with our 0.236 Fibonacci retracement. VIX that was up 21% that predicted this counter trend that we're getting on the S&P if our high holds on the S&P at the resistance levels that I'm showing you. The VIX is in back test mode. We broke out. We got above the 50. We got above the 200 here. And that was with that big reversal bar that we had on Friday, the 1st of August. Now we're in back test mode. And again, we're coming back to the 10 and 20, and it looks like they're trying to get a bullish cross there. Had the bullish divergences play out here on the RSI and down here on the MACD. The MACD, though, is struggling at that center line. If we get a successful back test here, if it goes positive, you're going to get a bigger sell-off in the market. We have the tightening of the Bollinger Bands telling us, hey, something's about to happen here. But the VIX has to get back above the 50-period moving average. You have a possible inverted hammer today at the back test at the 10 and 20-period moving average, or just slightly beyond them there. Let me just bring it up close so you can see. Again, we got a potential inverted hammer candlestick, a hollow red candlestick on the VIX as the 10 crosses above the 20 period. We're in back test mode. We've now filled the gap over here on the VIX as the S&P has filled the gap. And do we now have a successful back test that we now resume the advance on the VIX and get further volatility on the S&P, getting back above our 50. You got to get back above the 50 because when you're above the 50-period moving average on the VIX, bad things start happening on the S&P 500. You're below it, good things are happening. Now we're getting this recovery in this potential counter trend to our 78.6 Fibonacci. I'll be watching this candlestick. I'll be watching to see, do we bounce here, get back above the 10 and 20 period here? We've gotten the bullish cross of those two moving averages, and do we get back above that 50-period moving average? Potential reversal bar here on the VIX, possibly a back test. So again, the counter trend on the S&P might be done with the breakdown of our bear flag pattern. It's look more like a rising wedge on the daily chart, but on the intraday chart, it's clearly a bear flag S&P 500. I wanted to show you that up close and personal as we're in backtest mode after the breakout of the bullish falling wedge. Our bullish divergence is playing out. So there's probably more downside in the market, and I think we're only correcting, as I've said. Here's the S&P up close. And again, on the daily chart, it's looking more like a rising wedge, but you can clearly see on that 15-minute chart, 5-minute time frame, you can clearly see the bear flag pattern. Harder to see here, the daily chart, but we've gapped down after our peak on Thursday. We gapped down there on Friday. That gave us that surge on August 1st on the VIX, predicted this rally. There was a 21% surge on the VIX, predicting a 95% of a bounce or a bottom. We got the bounce. We're likely forming a bear flag. We've gotten back up to the 10-period moving average. We closed just above it yesterday. We jumped above it here on Thursday, but then we couldn't close above it. We closed just slightly under that level here in the daily time frame. Likely have a bearish bell hold candlestick. When you get these black Marubozu candlesticks, which means bald in Japanese because there's no tail on the top, it's at the end of an uptrend, it is a bearish bell hold candlestick. Bearish engulfing over here, when I first called the top, there was no confirmation to that candlestick. We went 18 points higher, and I made a second attempt to call top because I told you I thought a top was going to happen. In the upper Bollinger Band there, the resistance levels I've been talking about. Here, though, we didn't quite reach the log trend line. We still could reach that. We ended up doing it, the weekly trend line I've been showing you in every single video. I told you that at the time. If I did reach it, then I would be wrong about that, which I was, but I made a second attempt to call top here. I think that that's going to be correct. But as I've said, I think this is only a corrective move. I think we'll eventually move above this high, going to 66 or 6,700 or so. The trend lines I'm showing you in the weekly time frame, I'm showing you where I think we're going. So we'll see if the bear flag breaking down on the 15-minute chart now. Do we now start selling off to go try to take out the August 1st low? We still have bearish momentum on the S&P, but momentum turned back to bullish on the NASDAQ. It still has not moved to a new high, but Nvidia moved slightly higher, and Apple going up to the 200 period helped out the NASDAQ, a bullish reversal of conditions. So either it's going sideways now or up. Going sideways, it would have to revert back to bearish on the NASDAQ, but we still have a bearish signal for momentum here. S&P tried to get above the cloud on the S&P. It failed. We tried to rally, and we got another gap and trap. We gapped higher and we moved in the other direction. That's a gap and trap. And we closed just slightly under the 10-period moving average. The cloud is red. The bars are red. I told you that if momentum turns back to bullish, still may try to challenge these highs for the case, and I'd be wrong about that being a peak. So far, again, momentum is bearish here. We'll see if that changes or not. If we now have the breakdown, whoops, sorry about that. If we now have the breakdown of the bear flag pattern, then again we could resume the decline, moving again closer to our 50-period moving average or maybe beyond it, trying to move closer to this 200 period. I'm looking at these moving averages. These longer term moving averages is where I think we're going. The 50 period is at 61.67. The 200 period is at 59.10. The head and shoulders plays out. We can move just beyond the 50 period towards the 200, but not quite reach it. And again, we'll be looking at the gap fill over here, right here in this area, which is right where our trending cloud is and is right where the head and shoulders measures to. So we'll be watching to see what happens here, if momentum, if it can remain bearish. Still the possibility we get green bars here, but again, if we start seeing some oscillator go negative, the MACD start moving towards the center line, we can resume the decline. If we drop back below the 20 period, that's a blue line right there, and start moving back to test this low, to take it out, moving towards our 50 period moving average. I'm still bearish here on the S&P. NASDAQ, it turned back to bullish, but we still don't have a new high yet. Again, we're getting something very similar to what we had over here and over here, right here where we saw momentum turn bearish, turn back to bullish, momentum turn bearish, turn back to bullish. We're getting the same thing here. So either we're getting a lower high or we're going to challenge the high, but right now you're getting a lower high at the moment. Momentum back to bullish for the NASDAQ as we're going sideways, closing above the 10-period moving average and getting back above the upper boundary of the cloud. Momentum still bearish for the S&P 500. Again, I'll be watching. Do we get any kind of green here? Do we try to challenge this high? You have that possibility with flipping back to a bullish reversal of conditions. This tells us we're going sideways. NASDAQ daily chart here. Again, if we end up setting up a lower high, I'll be watching the 50 and the 200 period moving average. Because momentum did shift on NASDAQ, the risk is that we try to challenge this high from 1 week ago. Signals, some are mixed, others are bearish, like right here. Again, the diversions played out. Momentum is negative. We've seen the reversal. This is the S&P daily, but we've got the red bars. The momentum line is still red. It's a little hard to see there, but the momentum line, it flipped from blue to red. It is still red. Still have a bearish reversal of conditions. Those are my momentum signals. I have trend signals that are kind of mixed. Again, reflecting that we are going sideways. We've sold off, we've rebounded back up, and that's why you have that head and shoulders pattern that's setting up as we've rebounded, getting a Fibonacci, 78.6 Fibonacci retracement on the S&P. So we've got the ribbon here, bearish. We've got the cloud, bearish. We've got the bars, bearish. Tried to get above the cloud. We could not do that. It's still red. And momentum line, you can see here, it went from blue to red with that reversal bar, and it's still red at this point. So again, we'll be watching if we establish a lower high, and if we do we resume the decline? This orange line right here, this represents the swing move, and it's showing we're going sideways, and that's why we're setting up that head and shoulders pattern that I've shown you. Again, possible left shoulder, head formation, possible right shoulder. Even with the rally, the momentum is still in the negative region after the reversal. Signals here remain bearish. We can resume the decline, but we do have other signals that are going back and forth, really reflecting a sideways move as we're going in this sideways range, forming the head and shoulders. And I'll just put up some of my signals. Again, here we've had that reversal. Signal tells us either we have pullback or a reversal. I think it'll be a bigger pullback, as I've said, but I still think we go higher. We still have red bars here. Nice job of marking the bottom. And again, I create my own indicators. I program the indicator to tell me when we have a reversal and a trend move. It was a really good job marking the February peak and the sell-off, marking the reversal in April. When bearish tried to flip back to bullish, tried to get back above the cloud today, couldn't do it. Still bearish. Now this is telling me, again, no risk of downside. I have signals that are mixed though. Here again, we're going sideways or down. That's what this signal is telling me. We get rejection here. We got to resume the decline by taking out our low and seeing the head and shoulders pattern play out, seeing the breakdown now of the bearish bear flag pattern, 15-minute chart. Other signals are mixed as we're going sideways. Here we got a sell signal. We got some red going on, but momentum is trying to flip back to bullish. The bars are still red. So again, mixed signals as we go sideways. Up and hitting the 78.6 Fibonacci, the S&P. Again, here I programmed this indicator to tell me, again, to mark the trending moves. We had the gap lower on Friday, and again, bars are still red. So we'll see what happens after our breakdown of the rising wedge and the back test that marked the top. Again, mixed signals here. Trend is trying to change, but the candles are turning back to green. The candles have been green all the way up until now. Flip to red. Now they're turning back to green, showing the sideways move that could be a head and shoulders top. The breakdown of our bear flag pattern on the 15-minute chart. Some signals are mixed, others are still bearish. Momentum still bearish on the S&P. NASDAQ trying to turn back to bullish, but it's not yet moving to a new high. Being helped by Apple and Nvidia. Same thing here. We tried to get above the cloud and trying to flip it here, but it failed with the reversal bar that we had today. We ended up closing down. The signal still bearish here. Can we resume the decline with a lower high? We can if signals remain bearish, and again, some signals are mixed. The signals that I'm showing you that are bearish still, if they remain that way, then we can resume the decline with the breakdown of our bear flag in the 15-minute time frame. On the 78.6 Fibonacci, S&P just moved slightly beyond it. Again, still getting a lower high. We had a gap and trap on an intraday basis, but again, there's still risk of taking out that high on NASDAQ because momentum has flipped back to bullish. If we establish a lower high and get another lower high, then again, we could come back, fill this gap, and try to take out these lows. Again, possibly the same pattern the S&P is forming with the 5-leg push down for A, possibly an ABC move back up here possibly starting the C move if we don't move above this high, unless it's a flat, which would be a 335 pattern. I'm marking this as a 5. So a 535 pattern, a zigzag, not a flat. So I'm watching to see, does this high over here hold? We came closer to it on NASDAQ, but did not exceed it. Momentum turned back to bullish on NASDAQ on many signals, trend signals, whereas S&P, some mixed signals and other signals are still bearish. We'll be watching what happens with the NASDAQ. 15-minute chart here of the NASDAQ. NASDAQ 15-minute chart had that same gap and trap. Again, the gap and trap here, the gap and trap here. Hold off sharply, but we rebounded back up. Here's the bear flag, tried to break down, but then got back above that, and we went right up to the upper boundary of the bear flag right there and slammed the brakes on. So another potential gap and trap there for the larger time frames, but here on the 15-minute chart, you did get a gap and trap coming back to fill the gap. So again, does this high hold? Do we have a lower high? We start getting, a 1 and a 2 and then a 3. If this is a 5-leg push down, then you still have the potential of a 535 pattern. So I'll be watching. Does NASDAQ move to a new high, or do we now get a lower high and get another lower high here? We'll be watching the NASDAQ closely. NASDAQ 100 was up 0.32%. It was up 74 points. Again, here's the bear flag on the 60-minute chart. Does it hold? Does this high hold right here? And these divergences play out, giving us a lower high. Again, I've marked this as a potential completion of wave 3. Move to a new high. Maybe that's not done yet. If we break down further below the 200 period moving average, then again we can get the bigger sell-off. 60-minute chart here, sell-off, then the 50s got to cross below the 200 if we get a bigger sell-off. Today's candlestick is interesting in that it is a black candlestick with that lower high that's set up. We got a black candlestick. Often black candlesticks can mark turning points, not always, but oftentimes they do. So if we do get a lower high, we got to drop back below the 10 and 20 period. P got above the 10 period, but it closed just slightly under it. NASDAQ closed above it. So again, if we end up getting a lower high, I'm watching the 50, the 200, and the cloud here. We've had the divergence set up, gave us a sharp push lower, but now rebounding back up to test those highs, moving beyond the 78.6 Fibonacci on the NASDAQ. This is what I think is going on. I think, again, primary wave 3, and if we go higher, maybe it's not done yet. Primary wave 3, going to get primary wave 4, and then finally get final push higher for primary wave 5 to complete the cycle top.